I watch ads to double my arm.
Good morning, everyone. How are you guys doing today? Just give me a minute. I'll be starting the analysis for the day today in just a minute. We still have 12 more minutes before we place any trade, so don't worry about that. Just give me one moment. Perfect. Okay. Reset chart. Let's go to daily time frame. Let's play. Okay. So as you can see, yesterday we were talking about all the liquid sell side liquidities and all had been triggered. Unfortunately, we did not get entry when we were in the New York AM session. Okay, so now this price has tapped into this daily fair value gap. After tapping into that, it should be moving lower towards this weekly low of 28,408.25. So what we are looking for is short straight. We are looking for shorts till this low. Okay, let's price is already trading below previous day's low, which means it's bearish. Our bias is getting stronger towards bearish side. So previous day's high is going to be 29,342.50. Previous day low is 28,961.25. Okay, so we got previous high and previous day high and previous day low. Let's move to 4-hour time frame. Let's move to 4-hour time frame. We got this IFVG. Okay, so the only remaining drawn liquidity is this lower now. Okay, nothing on 4-hour time frame, no fair value gaps. We may have a bearish order block. Once this 4-hour candle closes below this low, we will have a 4-hour bearish order block. Okay, now let's move to 1-hour time frame. Let's see what's happening. 1-hour time frame, we have a fair value gap along with this bearish order block. So this fair value gap is going to be a strong zone. Okay, I'm going to take out this 4-hour order block. We got a level of interest here, so that's okay. Okay, so on a 1-hour time frame, what can we see? Price has stepped below this Asia session low. Let's see on a 15-minute time frame if we can see liquidity sweep, V-shaped rejection. There has been no candle closing below this low, which means I am not looking for longs as of yet. Okay, so on a 15-minute time frame today, we have Asia session high, which is open. That's the bull side liquidity. We have already got candle closing below this London session low, so we might be looking for continuation on towards downside. We have multiple 15-minute fair value gaps. 15-minute bearish fair value gap is right here. Price has already tapped into that. Same thing is up here. Okay, now let's move to 1-minute time frame. We have got a lots and lots of bearish level of interest, 15-minute fair value gap, 15-minute fair value gap, 1 hour fair value gap, with combining with order block, 4 hour bearish order block, a lot of things. So there will be a lot of bearish level of interest. Let's see if CVD supports any of these. If CVD supports any of these, then along with the signals we will take those trades. Okay, as of right now we can see one of the bearish fair value gap has been inversed after taking down Asia session low, after taking down one of the Asia session low. And if price moves higher from here, then the target would be 29,073, which is almost about 200 and 300 points. I still have 7 more minutes before we can enter into any trade. Let's quickly see how CVD is reacting. CVD is negative. Yeah, we have a lot of bearish volume coming in, which is good. Okay, we have to wait for the next 5 minutes until the first 15-minute candle closes. Until then, we are not taking any trade. Three more minutes before we put into an we start looking for any trades. Just wait. Hmm. Well, the reaction was like after taking down sell side liquidity below Asia session low, one of the Asia session low, what price did was gave us a bullish breaker block. Okay, watch this. This is for educational purpose. Look at this green candle here. Let me zoom in. Look at this green candle. So watch this. Price is coming down, made a low, then made a high, then made a lower low, and then broke out with speed. Now that is what we call a breaker block. It made a low and then it created a new high with speed, and that is what we call a breaker block. Okay, so price created a bullish breaker block right here. Tapped into this breaker block. Stop loss would have been this low. Stop loss would have been about 66 70 points, and TP definitely is still way up higher, but we would have got almost 1:2 trade. Okay, so yeah, this fair value gap has been inversed by a bit, but I'm still looking for shorts. It has tapped into this first presented fair value gap. It is slightly overlapping with this bearish order block, so I am looking for a bearish signal. I don't I don't know if I would take this. It with small risk. If this bullish fair value gap gets inversed, I'm going to take short. Okay, if this bullish fair value gap gets inversed, I'm going to take short with very small risk. Okay, because this would be the first inversion after this, but we got tap into this 15-minute fair value gap. We got CVD supporting. If we get an inverse here, then it would be a great it would be a great signal. No green candles in between. Okay, look at this. We did not get inversion. We have the CVD supporting. We have bearish CVD supporting 3 consecutive green candles. After that, we have 3 consecutive red candles. So that is one of the signal confirmation signal for bearish continuation or bearish reversal. Price has already tapped into this first 50, like first presented 15-minute fair value gap, and it is slightly overlapping with this small green candles wick, which is order block. So I am looking for short, but I am waiting for price to inverse this fair value gap. I'm waiting for this 1 minute fair value gap to get inversed. It is weak, but I'll go with a small risk, and I am short here. I'll go with small wick. Uh, I'll go with small risk. have stops placed. My target would be definitely this low, or this bullish breaker block would be one of the area where I'll be targeting. Okay, as I explained, the reason for entering into this trade is price is pretty bearish. This bullish leg in the first 15 minutes could be a manipulation leg. Okay, we got tap into this first 15-minute fair value gap, then we got an inversion, we got the CVD supporting, so this trade could work out pretty fast. The stop loss was about 53 points. We are already running 66 points in target, 70 points in target. There should be no losing from here. 78 points in TP. So that's a great trade. That's a great trade. No losing from here. I'm still gonna try to hold this off. Okay, so I have taken partials. Here. I have taken partials here. 76 points should be easy, but yeah, it is tapping into this inversion. Price is pretty bearish. It would be easy for us to just continue to hold all the way till low. I took an exit at about 70 plus point partials at 70 plus points. Okay, stops at break even. Let's wait and see. Now we got this liquidity sweep with speed, V-shaped rejection. What we are facing right now is the first bearish order block right now. Look at this. This is a bearish order block. If it holds, it holds. If not, then we have another fair value gap that will be taking the price lower. Okay. Okay. Now that the bearish order has worked, I do not want to see price coming above this green candle. So I'm going to be moving my stop to this high. Okay. We are already up 100 points. There should be no losing from here. Okay. Watch this candle. There is no wick, which means that this is a draw on liquidity. Okay, watch this candle. There's no draw. Okay, the draw on liquidity has been tapped. You should not be losing anything from here. Okay, I took off my position here at 110 points. So that's a great trade for today. Perfect. Just risking 200 points, just risking 50 points, we took out 110 points. So that's a great trade. It could still continue to move lower. Market is pretty bearish. We might get another opportunity after breaking down of this low, but that's a good trade. 110 points of trade. Okay, perfect. That's a great opening. As I was telling you guys on Monday itself, that if Tuesday is choppy, Wednesday might be slight choppy, and then Thursday will present us a great trade opportunity. And we got the same. We got 110 points in the opening session. Now let's wait. Now let's wait. Okay. Now let's wait. Full exit at 110 points. Okay. Now watch this for value gap. Watch this for value gap. Okay. Now this for value gap, bullish for value gap. Let's see here, right here. Anybody who missed entry would try to take an entry here, but we are out. I'm not taking any trade in this leg anymore. I'll be waiting for another leg. It could be breaching of this after breaching of this low. Until then, we have captured what we wanted to see. We captured all those things in here. So see, following the rules, we did not take. We tried to take two trades yesterday. We went break even. We did not take any money home. Tuesday we did not take any trade. Monday we captured 110 points. Today we captured 110 points. Now watch this. Watch this. What level of interest do we have? We have the 15-minute first presented fair value gap. Okay. What signal do we have? Liquidity sweep, V-shaped rejection with IFEG. And is CVD supporting? Yes. Three consecutive green candles. After that we got three consecutive red candles. So which means CVD is supporting. Okay, as soon as we got the inversion at this fourth red candle, we entered shorts, and then within 4 minutes we hit our target. Like we took full exit of 110 points, risking 53 points, making 110 points. That's also good for risk reward. So that was a great trade, great opening trade for today. Let's see if we can find another opportunity of this continuation. I don't want to take any trade here. As we can see, liquidity sweep, V-shaped rejection with three consecutive green candles. It is stepping into this inversion, fair value gap, which got inversed. So I'm not taking a long and short entry here again. I'll wait for another trade after this leg is complete. Either breakout of this high or breakdown of this low. Okay. Once price could still continue to move lower, and that's how price works. But what we have to do is capture the best part of it. Now if I'm not confident here, I'm not going to enter into a trade. Okay, if you guys want, you can take and trade this inversion for this continuation lower. Okay, you guys can take this trade if you want, but risk is 76 points, target is 100 points. I'm not entering into this trade. We have already booked our profits for today. Now we will wait for the price to get out of this leg, either break out of this high or break down of this low. Once we get that, we will be looking for another opportunity, another level of interest. Okay, so be patient. As I told you, this was the second entry. This was the second entry, but the risk is a little high, 75 points. I do not enter into this trade. Anybody who would have entered into this trade would have been 50 points up. There should be no reason, if you are up 50 points, there should be no reason why you should take a loss from that trade. Either you can book profits, or either you can put your stop loss to break even for a higher target. Okay, price is pretty bearish. It's still gonna flush down. Weekly low is our target. We still have about 300 points lower, just in case once we get another level of interest, we will take another trade. Okay, Now this fair value gap has delivered its delivered its target of this low. There should be no reason why it should be moving up higher again. It should be breaking down. If not, then it depends on price what it wants to do. Okay, we took what we know. We captured the points. So this week we took 4 trades. This week we took 4 trades, two with 110 points and two break evens. So no loss. So this is how you accumulate. This is how you accumulate profit. You don't need to trade every single day. Okay. Monday was a great banger trade. I gave 160 points of trade. I personally captured 100 points into that, and today I personally captured 110 points. It could still be moving lower. It still has room for another 70 points lower, but I am not entering into this trade. Okay. As a day trader, as a professional day trader, my job is to time the entries. I don't want to I don't want to be taking entries randomly expecting price to move lower. Okay, this was the best entry. If I would have holded the trade, then I could still be holding the trade, but if once I'm done, I do not want to enter at any other location. Okay, I took an entry where the signal was fresh. I don't want to enter again expecting price to move lower. Okay, so perfect. That's a great opening for that's this week is great. We took 2 trades of 100 plus points, 2 break-even trades. So yeah, continue. If we can continue to follow this kind of setups, if we continue to get this great setups, then in no time we'll accumulate a lot of profits. Okay, 100 points of trade, perfect trade. It can still continue to move lower. There are no indications that it will be going bullish. Now look at this. Liquidity sweep of this high, V-shaped rejection, fair value gap, inversion of this fair value gap, plus fair value gap, tapping into this fair value gap, it is moving lower. Now anybody wants to take short can also always take this short here, but I'm not interested as of right now. I'm waiting for price to move out of this high and this low. Once it is out of this range, I'll be looking for another level of interest. Look at this. A lot of people would be waiting to take price long, right? They saw this inversion here, this inversion here, but what they forget is there is a first presented 15-minute fair value gap. Okay, now that is generally very strong area, very strong area. So at that location, if we get a signal at that location, there are higher probability that it will continue to flush down. Okay, we got the same signal as well, liquidity sweep, V-shaped rejection, and inversion of this bullish for value gap. And watch this, there has been no green candles coming from here, right? If price was such strong in such a strong rally, we got 4 consecutive red candles. That just shows the dominance of bears, especially when the look at this big lag here on 15 minutes. It's so bearish. Okay, it won't be easy for bulls to take out all the highs in first attempt. So have your context ready before you enter into any trade. Have your context ready. Once you have your context, read what is happening, and then and wait for your setup to uh, develop. Once your setup has been printed, just enter the trade with proper risk and wait for the result. The drawn liquidity is still lower at 28,656, but I'm still not entering into this trade. Okay. I'll wait for price to move out of this leg. Until then, there is no trade, there's no reversal longs here, there's no continuation shorts in between. Okay, we have to wait for the new level of interest. As of right now, there is no level of interest for longs and there is no level of interest for short. Yes, it is coming from a 15-minute fair value gap. It should be moving lower, but where we have to enter is at the level of interest itself, not in a continuation, especially when price is moving with such speed, but it is going 50-60 points in 1 minute. At that time you have to be very careful of your entries. You don't want to take any random entries because you will continue, like one stop loss can take 50-60 points, 70 points easily. Okay. Perfect. So great. Great display of character. Fearless, entering where we need to enter and exiting where we need to exit. As soon as I saw this drawn liquidity getting tapped, which also means that we also tapped into this bearish, so this bullish order block. Okay, it also tapped into this bullish order block, so I was aware of that, and that was our target from the beginning. We were targeting this bullish order block, sorry, bullish breaker block. What's this? And we hit our target and we took an exit. Okay. So we got the level of interest, we got the signal on that level of interest, we got the CVD supporting, we took an entry, and then we targeted the first area of resistance, or first area where bulls can start buying, as well as the draw on liquidity. So everything matched perfectly, so this is called as a perfect trade. Yes, definitely according to this 15-minute fair value gap it should be moving lower, but look at this hesitance. It will move lower, but there will be a lot of hesitance. Okay, now, yeah, the drawn liquidity is lower. price is looking to take this low and is still gonna move lower, I believe. Looking at this, look at this bullish candle and look at this bearish rejection of that bullish candle. So this displays bears still does not want to let go of this price higher. Okay, we have a draw on liquidity of 28,408. It can still continue. It can continue 200 points, 300 points lower from here as well. But just because we know draw on liquidity doesn't really mean anything. That just is one part of the context. What we require to initiate a trade is a level of interest, signal on that level of interest with supporting CVD. And CVD might seem insignificant, but a lot of time it has helped us. Uh, spot out the fake signals. So learn CVD, observe CVD, how good signals are working, how fake signals are working. Just observe that, and you'll understand what CVD is. Okay, so 40 minutes into market open, we are already done for the day today. I would love to see the price move. I would love to see price move down fast and give us a good entry at this bearish order block, but that's what my expectations are. That's not what price is doing right now. Okay, so where was I? mm, yeah, I was just watching. Yeah, 21 minutes into market open, we are already done for the day, waiting for another opportunity to add more into our trading today, in our PNL today. Okay, take the best trades only, best trades only. Once you focus on that, you will see how significantly your losses will decrease. The number of losses will decrease, and that will boost your mindset, that will boost your morale, and it's not that hard. I just trade for two hours a day, sometimes not even 2 hours a day, but still we're consistently taking money out of the market. It's not about how long you sit in the market, it's not about how much you know about the market. It is about applying the same thing consistently each and every single day. We have strict rules. We just trade level of interest, signal on that level of interest with supporting CVD. Once we do that, we get like we can filter out a lot of good trades, A plus plus trades. No, actually, I'm not using Lucid right now. I'm with my funded futures. Pretty soon, I'll have a look. But to be honest, you should always be trading on your laptop or computer with a good screen as well. Trading from phone is not really advisable. As I mentioned in my introduction video, see of the series that I'm making right now, I used to trade during my 9 to 5 job on phone as well. Whenever I got time, I used to watch it on laptop, but sometimes I used to trade on phones as well, and that has never given me a good result. Always trade from your desk, sit patiently when nobody is disturbing you, just wait there. 2 hours a day is good enough. 2 hours a day is good enough. We captured 110 points today. Okay, Even if you have 5 MNQs, that would be around 1100 US dollars. Okay, if you had one NQ contract, that would be $2200. And a lot of people here in Canada, especially, a lot of people do not have that kind of salary in a month. Okay, so that's great thing if you can consistently do this thing. Just with one account, if you can make 2200, imagine that thing being done with 5 accounts. That will be $11,000 in one day, in 4 to 5 minutes. So once you learn consistency, once you know that, once you are are doing this thing consistently, money will flow. You just need to minimize your losses, which means you do not have to take, you should try to trade A++ setups only. You should try to avoid trades which you don't feel good about. Okay, now I saw this trade, but I did not take this trade, because not just because I made profit, but because I knew that this is not a great entry for me. The risk was 75 points. Okay, if I made 110 points, if I took the risk of 75 points in the next trade, or 70 points in the next trade, imagine I hit the stop loss of this trade, I'll be just up 40 points a day. So your job, so this is the best trade for the day. Now this is second best trade for the day, but still I would always prefer to take the best trade of the day. Yeah, you will accumulate money over the period of time. You will accumulate a lot of money over a period of time. You just need to be consistent with your setup. And once you believe in your setup, it becomes so easy. Like I sit here every day. It's not that I was not able to see a lot of setups yesterday. I was. But did I take any trade? No. Why? Because it does not fall into the category of the way I trade, okay? I do not trade SMTs. Even if I can see SMT, I do not trade them. I can trade EMA, I can trade volume profile as well. Knowledge does not mean anything in trading. In trading, there's only one thing: consistency. You should know your setup, you should know how to form context around price, and then consistently execute the same thing each and every single day. Have your mindset, have your mental capital preserved. Do not continue trading every single day for a whole day. Just 2 hours a day is good enough. And let me tell you one thing: once you start making money with bad trading, is like it's worse than making money. It's worse than not making money with good trades. So understand this. Like once you take a bad trade, and if you make money from that trade, is even worse than losing that trade, because now you will start believing that you can take a bad trade and still make money. Okay, so that is far much worse than losing that bad trade. Also understand one thing of market cycles are important. Not every day we will get the same trade, not every day you will get the same signal. As I told you, the reason why I used to lose a lot was simple. I did not understand that market had market had different cycle. Market trades differently in June than in January. Market trades differently on Mondays and on Tuesdays or Wednesdays. Okay, since last since last whole month, I've been noticing a cycle of market. It trades for 3 days where it gives good signals, and then for the next 2 days, it just chops. And majority of the people get wiped out in those 2 days, expecting market continuation. Thursday, Friday, we will still have 1, 2, 3, 4, and 5. Okay. Okay, let me know if you guys want to learn something or understand something. Look at this trade. If you would have entered shorts at this value gap, look at this trade. It's 9:57. It's been more than 20 minutes and price has not moved far away. It has not given you the result. So this is generally the time when I would have stopped myself at whatever it is. After 20 minutes, if price continues to chop, it's generally the time when I would time stop my trade. Okay, so you want to learn about order block. So now that there's no trade happening, let me just switch it to this. Okay, watch this price action here. Okay, price came down, went up, came down, and now it went up straight up high. Okay, or it doesn't really matter. What matters is like price when it is in uptrend, it moves in this swing high, swing low, higher high, higher low, higher high, higher low. Okay, so generally as per like like oh, previously people used to make this high, like previous high, as support, and what they expect is price generally takes support like this at this level, and the next time when price breaks out another swing high, price takes support at that at that swing high and then moves up higher. Okay, so remember this context. Now watch this. Same thing is happening here. This is a low, high, low, higher low, another higher high. Okay, so when it created this another new high, watch this red candle here. Watch this red candle doji. When this doji, look at the wick of this candle. Look at the wick of this candle. Okay, so the wick of this candle, for me, that wick of the candle becomes bullish order block. So once this green candle closes above this red wick of this red doji, this becomes a bullish order block for me. So now when price comes back down, I would be looking for a bullish signal for continuation high. Okay. For another example, now uh, let me give you another example. Okay. Uh, this could become one of the example. This could become one of the example. Look at this: high, higher low, higher high. So this, the wick of this candle, the wick of this candle, it becomes support level for me as a bullish order block. It unlike fair value gap, any candle closing below or just a wick going below that low does not mean a lot to me. As long as the structure is intact, we will still look to take a trade long from this, like from this order block. Now why, when does this order block becomes important? So it becomes important when we have trade like this. Look at this 15-minute fair value gap. Now this is the last swing can, like before this could fall downside series of red candle, this is the last green candle. Now the wick of this green candle is overlapping this fair value gap. Okay, so that wick of green candle becomes a bearish order block for me. Okay, so that is my bearish order block. Now whenever we have combination of these two, for value gap plus order block, that becomes a strong zone for me for a reversal or a for price continuation. Okay, same thing that would go around for here. Like this is a fair value gap, but unfortunately there is no overlapping here. I can show you another thing. At any point you have to understand the structure. At any point you have to understand the structure correctly. Just because we have a bearish order block or bullish order block doesn't mean anything. That is just one level of interest. Okay, that is just one level of interest. Watch this green candle here low, that will become a order block, bearish order block. Now watch this red candle high. This red candle high will become a bullish order block. Whereas in breaker block it's different. Breaker block I can show you guys on 1 minute time frame. This is a clear example. Okay, this is a clear example of a bullish breaker block. Now look at this, price is coming down here, created a high, a lower low and a higher high. Now price reversed its structure. So the small candle high, like this small leg high, the first the last leg before price reverses is the breaker block. The last leg high before price reverses is the bullish breaker block. And if you guys don't understand this, don't worry, I'll be making videos. You can see them. It will be out pretty soon, so don't worry about this. Look at this green candle. Always follow the structure. Low, lower high, lower low, and then higher high. Now what happened here? We got a liquidity sweep. We got a liquidity sweep of this low with speed. We got a V-shaped rejection out of this. So in this leg here, the leg which created the small uh, or lower high now becomes your bullish breaker block. So the green candle in that becomes your bullish breaker block. It could be one, it could be multiple. It could be one or it could be multiple or series of green candles as well. But it has to be a green candle and it has to be a series of green candles. Whereas our order block would be something like this. Okay, an order block would be like this. So the last red candle or this doji here, it has this doji has small wick, so I'm not considering that. I'm considering the biggest wick in this series of red candles. So this the wick of this red candle or black candle becomes my bullish order block. Okay, in bullish order block we are looking for red candles. In bullish breaker block we are looking for green candle. Did you guys understand this now? You just need to remember the structure of you just need to remember the structure. Like, structure is basically the most important thing. Okay, once you learn the structure, like, structure is the basic thing. Okay, now watch this. Once this candle closes below this low, there will be two order blocks for me. One will be this green candle low, wick of this green candle, that will become a bearish order block for me, and another order block would become this wick. So I'll consider both of them as order block. It's just an area from which I would like to see a reversal coming, like a reversal or a continuation trade coming up from. Okay, I need a candle closing below that. Now we have the drawn liquidity as 28,408. The target of this first presented 15-minute fair value gap has been achieved. It can continue to move lower as well, but let's see if we can get another trade in next 60 minutes. If not, then we are almost done for the day. Okay, I think I spoke a lot of things today. Um, mm, mm, mm. Look at this fair value gap. This fair value gap is overlapping with this low, which is a small bearish order block. So this fair value gap generally becomes a good area to short. But this same scenario should be on a higher time frame, just like how we had here, and we should get a signal from that. Okay, we need three things. That's how we use the level of interest. We need a signal on that level of interest, and then we need a supporting CVD. But this level of interest, signal at level of interest, and supporting CVD. Once you have all these three things, it should become easy. What becomes a BPR? Hmm. No, it does not. BPR is when BPR is this area. Watch this. We have a bullish fair value gap up here. Okay, we have a bullish fair value gap up here. Now from the same area we have a bearish fair value gap. So this area where bullish fair value gap overlaps with bearish fair value gap, that becomes a BPR. So how can you trade BPR? You can generally trade like a normal fair value gap of that, but I do not trade BPR solely because it is BPR and it should be a strong zone. I do not trade it at this way. Okay. To become a consistently profitable trader, you do not need to know every single thing. You do not need to learn about order block. You do not need to learn about breaker block if you don't know about that thing. It's just about what your system needs. Okay, what my system needs is I just trade on based on this 15-minute fair value gap and session highs and lows. I just trade based on those two level of interest once, and sometimes order blocks. So those three. Once we have knowledge of these three things, that is just level of interest. Then we're looking for signal. Signal could be liquidity sweep, reshape rejection with IFVG. It could be with FVG. It could be with order block, breaker block. Yeah, BPR is not in my books as of right now. I know what that is, but I do not trade solely based on that. Your job as a day trader is to know what your system needs. Once you have what your system needs, your job as a day trader is just to consistently apply the same system every single day without having uh, money in mind or fear in your mind. Once you consistently do good trades, you will automatically become confident of your ability, because money can be made easily. Just once you know it's selling, just sell it where you need and just hold it, and you can still become profitable, but that requires a lot of mental strength. Hmm. 6 hours and 40 minutes. Okay. Okay, it's 10:45. It's 10:45. Okay, what's this? The wick of this green candle here now becomes a bearish order block. Why did I mark that as a bearish order block? Because price is coming down, moving up higher, prices broke down again. Okay, generally I would like to see price break down and see a good continuation candle first before it comes to this order block, but this is a bearish order block for me. Look at this low will now become as a resistance, so that resistance is where this green candle's wick is what becomes a bearish order block for me. It is just a level of interest. Price can continue to move up higher and then give us a reversal signal, but you should know when to take that into your context. Right now I am not taking entry in this bearish order block before until and unless we get another red candle continuation lower, and then slowly price comes to this order block. Okay, feeling a little tired today. I don't think we're going to get any other trade right now. Look at this green candle that was without wick. It went up high, price came back down, took down the low of that wickless candle, and so always notice that these becomes draw on liquidity. Yeah, we got a better PA, but we can wait. It still slowed down a lot after first 15 minutes of rally and another couple of minutes of flush down. It stopped. Look at this, it has been more than an hour, almost an hour, since prices started chopping. Yeah, the drawn liquidity is lower. Definitely it could continue to move lower. Okay, so what I would suggest is that wait for price to give you another fair value gap. Wait for the signal on that fair value gap. Look at CVD. If CVD is supporting that signal, then you can take a trade. If not, then let's see what happens tomorrow. Tomorrow should also be a good day to trade. If it is moving good today, then it should be moving good tomorrow as well. But if it starts chopping, then we know that for 2 days it chops in a row. Okay, we have been I was expecting a good trade, another trade, but prices chopped down. It can continue lower, it can give you a fair value gap as well in the upcoming 15-minute candles, but I believe I'm done for the day. I'll come back tomorrow. Let's see if we get a good trade opportunity tomorrow. We'll take a trade. If not, then we will preserve our 210 points of lead for this week and start over the other week again. Okay. Until then, trade responsibly. Trade your setups. Trade what you know, and trade only when you do not have to think a lot. Like this signal was pretty good for me. I was pretty much confident in the signal, and after entering into this signal, we did not get any drawdown. 99, 110 points, easy 110 points for the day. Just watch how you trade. Do not focus a lot more on market. Watch how you trade. Once you keep watch on yourself, it will become easy for you to become a consistent profitable trader. Okay, so see you guys tomorrow with another session, and trade responsibly, trade well, have a good day.